Thank you so much for joining us this morning to talk about the path forward for Web3. I'm Frank Chaparro, editor-at-large at The Block, and we have three esteemed panelists joining us for this conversation from many different walks of life in the crypto world. We have one of the top hedge funders, one of the top venture capitalists, and one of the top ecosystem founders. We're going to talk about whether or not we're in a crypto spring. I hope we're not jinxing it with this panel, Amy. Hopefully the winter has thawed and there is a path forward. I'll have each of you introduce yourselves. I'll start with you, Raj.
Sure. Hey, thanks for having us, Anthony, Sam, everyone from Salt and FTX. My name is Raj Gokal. I'm one of the co-founders of Solana, the high-performance layer 1 blockchain network that first launched its mainnet in 2020. Now, one of the leading blockchains by developers and users and NFT volumes and DeFi volumes. I'm Chief Operating Officer at Solana Labs that builds products on top of that network.
Hi, everyone. Thank you all for being here. My name is Kyle Samani. I'm a co-founder and managing partner at Multicoin Capital. We are going to turn 5 here in a few weeks. We run a few billion in assets across a hedge fund and a series of venture funds, investing all the way from 2 guys or gals with an idea, all the way up through Bitcoin and everything in between.
Hey everyone, I'm Amy Wu. I'm at FTX. I work really closely with Sam, who you just heard, and I help run our initiatives on the venture side, also investments and some of our consumer partnerships.
Kyle, I remember when we first met and you were managing 75 million, so that's quite incredible.
Exaggeration at that time.
You think you were amazing? Are you exaggerating now?
No, not exaggerating now.
So obviously the price of digital assets have dropped precipitously from the top, but we still see new fund announcements almost seemingly on a daily basis. The level of activity around things like Solana-based NFTs has increased. There's obviously the merge upcoming. Amy, when you look across the ecosystem, what signs do you see that we are indeed re-emerging potentially into a spring out of a winter?
I think time is still, the timing is still kind of an unknown. And this cycle, it's a lot more tied, as Sam mentioned as well, to macro markets. And so I think what we notice is sort of the difference between this bear market and the last one, which is that, people really haven't stopped talking about crypto, and certainly it hasn't really impacted builders in the space who've really been just heads down. We're seeing more interesting use cases in the space, and so I think those are all really interesting and different characteristics in the last market. I'm probably one of those people who really think that the launch of some really killer use cases, and that might be on the social network side, that actually might also be, for example, on the Telegram side, right? With like 750 million users, are going to potentially be one of the drivers into the next market upswing. But it's a pretty hard time.
There's also on the sidelines, and this is almost a meme at this point, the institutional capital sitting on the sidelines. But to Kyle's sort of size, there is a lot of money that's been raised that provides maybe a backstop for founders and entrepreneurs who, even though price is bad, there's still capital from which they can draw to build. We haven't really seen a slowdown in raises, have we?
I think things are slowed down relative to like March, April, or January, February rather, in terms of private markets. But like that was just kind of frenzy time. But deals are generally getting done now. I mean, good entrepreneurs working in interesting spaces can raise seeds and A's in a matter of a week or less. It used to be 24 hours or less, so it's no longer that hectic. But certainly still things are moving.
And where do you see signs of hope for something like Solana, which obviously has a token, but you're building at the same time? How do you keep yourself from being distracted maybe by price?
Yeah, I think, the goal and the focus has always been, not to focus on price for any one asset, but the leading indicators tend to be, independent grassroots developers that are finding new use cases, building products that, deliver value to users, and they're building businesses that make real money and get them out of their full-time jobs. And that seems to be, I always compare this to, 2017, 2018, when, you could look at everyone in the same room who was seriously building to actually launch a product and really believe that, crypto was definitely going to be around in 3 to 5 years. Now that's not a question. I think it's more about entrepreneurs, positioning themselves and knowing what bets they're making about which use cases are going to really take off in the next cycle. And yeah, I mean, now it's also global. I just came back from India. There's thousands of developers at hacker houses, all just onboarding, learning, trying to position for the next cycle.
And what's interesting about some of the work Solana is doing is you're kind of bridging for the first time the analog world with the crypto world. So crypto is not today some isolated universe on its own. You have the development of the phone you're working on. You have the Solana stores that your affiliates are working on. Maybe we can talk about how crypto and the traditional, not just financial world, but Web2 world are kind of integrating together.
Yeah, I mean, people really, for whatever reason, have really latched onto this, Hudson Yards store, which you can all visit. It's, there next to the Gucci and Louis Vuitton stores in Hudson Yards. And I think the real thing there is just, there was a lot of incredibly energetic retail, expertise and talent that, sees Web3 as the next big trend to capitalize on. And some of those folks decided, now might be the time to be able to onboard thousands of people in person, because sometimes for, normal folks who aren't super tech forward, they just need somebody. And Apple proved this, right? With the Apple stores, with the Genius Bar, putting a face and a name and a physical logo and a presence to a technology can often make it more approachable. So yeah, I think it's been just over a month. There's been 15,000 people have come through. 87% of people that walk through are onboarding to their first wallet and becoming, retained 3-day users of crypto with a self-custody wallet. That's, to anybody that's been watching crypto, for the last, 7 to 10 years, that is a very high conversion, and it's still super early what they're, onboarding to. It's, NFTs, monkey pictures, very much like a toy is what this stuff feels like. But people are seeing real joy, and they're starting to really see it as approachable and easy. And, performance is definitely important there. It has to be fast and cheap.
Monkey pictures are also very important as well.
One thing I want to add, just like bridging kind of Web 2 to Web 3, or just crypto to the physical world, there's kind of this little niche in crypto. We kind of call it proof of physical work. There's a bunch of teams now trying to use crypto incentive systems to incentivize people to build physical world infrastructure. We were very fortunate to invest in a thing called Helium a few years ago, which is today kind of the largest of the proof of physical work things. But Helium does, basically, you can put a hotspot in your window, creates radio waves, and you can build a wireless network where if a device is walking around, you can pay per byte of data to access those radio waves. It's a really cool idea because it's one of those things that, like, to make it work, by definition, you need a ton of geographic distribution, and you can use crypto incentives to do that. We're now seeing a bunch of ideas that are, I'd say, very Helium inspired. There's a thing called Hive Mapper that's basically the same idea for mapping data. There's people working on this for weather data, for car telemetry data, various other kind of incarnations of the same core idea. What's really exciting to us is actually a ton of those are building on Solana. Hive Mapper is building natively on Solana, for example. Helium was its own blockchain, but announced a couple weeks ago that they're moving to Solana. And I think that kind of entire community of bridging analog physical world to crypto native world, I think most of it will end up on Solana, which is pretty exciting.
One sort of category of investment opportunity that really took off during this most recent cycle was the X to earn phenomenon, play to earn, sleep to earn. I think we had run to earn, obviously. Maybe one day we'll have conference to earn for future SALT events. But when I think about this, and I think I spoke with you, Raj, on my podcast about this subject, what is the path forward for these dApps that sort of have a token, and if you do X, you get token Y? How do they what's their path forward if the price of that token doesn't sort of stay steady or go up? Using Steppen as an example, which basically gives you a token for running, and you have an NFT sneaker embedded into it. how can an app like that function, or how can they sort of engage their audience or their customer base if the price of that token is not constantly mooning?
Yeah, I mean, I think so. Again, all this is super early. The idea that we're talking about a walk to earn app with sneaker NFTs that you earn tokens for steps is a very early concept of proving out, how to grow a network of people with token incentives. But I think the thing that STEPN, proved out is there did seem to be more stickiness and retention and value to users out of the fact that people, I think 2 million people within 4 or 5 months grew into this network and were walking 20% more than they were otherwise. I used to be in digital health, sell to health insurance companies. We built and managed behavioral health programs, trying to get millions of people on the cusp of converting to diabetes to walk more and avoid these very preventable chronic diseases. We're not there yet, right? There isn't a crypto native insurance network that internalizes this risk and is willing to pay for it, but users are willing to pay for it in the form of taking on risk with these assets to participate in this network. It's, again, still very early. This was a hackathon project that won first prize something like 8 months ago. They built it in a couple weeks to get it to that point. But there is something new that was proven out there, and I think when these networks connect to some real world value, like people making that commitment, walking more to be able to earn back their initial investment, we're just seeing a user behavior that millions of people are training on. Entrepreneurs can start to bet on, and they can start to build new versions of that product. So there's another app called GenoPets that has 300,000 people on the wait list that uses a lot of the dynamics that STEPN kind of pioneered, but they have this beautiful art. It's like Pokemon Go. You have monsters that you're catching all over the the city. And this isn't happening yet, but you can imagine that each of these walkers could be witnessing nodes for helium, and they can be contributing to 5G coverage verification by playing a game. So, again, super early, right? But each of these little Legos alone looks like a toy. Together, they can sometimes become something very powerful. And that's what I'm excited about over the next, 5 years.
Amy, you do a ton of investing. You're one of the more active investors in gaming, blockchain-based gaming, but gaming more broadly, especially when you were at Lightspeed. That was kind of your niche. It's a similar... Those types of applications face a similar existential question, which is this new model, if the price of the token declines, how do you keep the incentive structure stable and robust?
Yeah, it's interesting because you can draw a lot of learnings from the gaming world, because these games have been balancing complicated in-game token systems for the last 20 years, basically. I think fundamentally, there's a lot of experimentation in this space, but it takes a lot to sustain, I think, a token price. As you see a lot of volatility, what you see is, a token gets launched, and if the only utility is actually the project giving out tokens for some sort of activity, that's actually not a business model. Like it's a marketing expenditure, right? It can help with like user acquisition or retention, but that in itself is not the business. I mean, there's a lot of, I would say, analogs in consumer internet in which maybe an initial business, maybe it was actually the first couple of years at Uber, which was actually, sort of gross margin negative. You amass a large number of users, and as you essentially cross-sell other products, then you become unit economic positive. And there's concepts of that, like in the token model as well. When you start having large numbers of people that initially try out a particular service because of the tokenomics of it. But ultimately, what is the business? It's, maybe it's a super fun game. Maybe it is a NFT brand. Maybe it's, hotspots, Wi-Fi hotspots, right? But there needs to actually be a business model underneath all that. And so it's interesting because I think one of the characteristics of the last bull market was a lot of the proliferation of new tokens where there wasn't a model, I think. Sure. And I think as
like Potcoin.
Yeah, and I think like we've seen, at least in venture, like a transition where actually like very experienced entrepreneurs. A lot of them have been studying pretty deeply the crypto markets for the last couple of years. And we see just higher and higher, I would say, like experience and quality of like entrepreneurs entering the space where they are not just bringing like Web2 business models and putting a token on top of it, but are rethinking business models when you unlock the power of tokenomics and all the things you can do with that, and smart contracts, and and also there's a lot of entrepreneurs that are building on the infrastructure side and improving the primitives of that. For example, Armani and Backpack and Solana and many others. What can you do with this technology? And of course, there's also a regulatory component to that as well, right? Without clarity from SEC and other regulatory groups around what exactly is the security, what is not, people tend to be more conservative as well. And so over the next few years, we see a lot of that use cases just being unlocked at the same time as there's experienced entrepreneurs and coming in, and suddenly you'll see a lot more innovative use cases around the token, because I think what we've seen in the last couple of years is very early. And I think most people in this space don't think most of the tokens are very sustainable, but they're early experiments in the space.
Yeah, and the caliber of entrepreneurs in the space has certainly increased since the last cycle. What do you look for? What type of deals are you trying to make right now, Kyle?
We generally want to be exploring new white spaces. So, for example, we did a deal we announced a few months ago called Delphia. Delphia is a hedge fund, and the kind of core idea of it is they're building a data DAO around it. So the idea is they want to basically incentivize people and say, hey, do you have data that we can use as a trading signal? For example, are you an influencer? Do you recommend products on Amazon? Your recommendations and your purchase history may be interesting signals for some sort of quantitative hedge fund. So the idea of Delphia is basically to market to the world and say, hey, do you have useful data? Upload your data to us. We will trade on it. And then if we can produce alpha by trading on it, we can then share some proceeds of the profits back to you in accordance with the percentage of the signal you were able to contribute to the broader trading strategy. It's a really, really crazy, radical idea. And we're seeing more and more people apply crypto in kind of these like first principles, new ground up ways. We're finalizing a deal right now with another asset management firm that's doing something similar, but kind of different, but let's say spiritually aligned with Delphia. We're seeing people build new kinds of games, new kinds of proof of physical work networks. There's people identifying ways to leverage the trust minimization, censorship resistance, permissionless incentive structuring properties of these various crypto systems and put them into markets and really come up with new ways to rethink markets. Probably the best example of this so far is Helium, just in terms of scale. There's about 1 million nodes right now in the Helium network that have really proven that you can do this. And I think there's just a ton of things emerging like that. So the area where we spend our most time is like, to your original question, Frank, is like finding these new white spaces of like ways to put crypto into a market and reshape the market.
When I think about some other bright spots for the path forward for this space, I feel like brands that are entering crypto are doing so in a much more authentic way relative to maybe 2017, when it was really mostly firms coming out and saying that we're going to accept Bitcoin, and then they stepped back from it and kind of forgot about the space for a few years. When you think about NFTs, right, we've had Tiffany's come out and say that they're going to put out a collection of real physical representations of CryptoPunks. We saw this morning Starbucks announce that they're going to do or launch some sort of NFT loyalty program. Is that a boon for a space, or is it just sort of marketing theater?
I think it's a little bit of both. I mean, it's promising that, these companies are doing the research, figuring out how to be authentic, and kind of positioning themselves for what they feel is, a very powerful new tech trend. And they see, some of the most powerful and engaged parts of their user bases already, super engaged with crypto, and they want to meet those two worlds together. I, personally do think it's new independent brands that get built in a crypto native way that are going to be the most powerful drivers of adoption and create the most value. But yeah, it's super promising to see, existing brands at least make forward progress and honestly not fall on their face, because we've seen that a lot. It's very hard to make a transition into, launching a crypto native product elegantly.
We've actually spent a fair bit of energy internally trying to kind of do an analysis of like, what are all the different consumer brands doing with crypto out there? I can't go through all of that, but like just two pretty high profile examples. One is Tiffany's that Frank alluded to. What Tiffany's did is they said, hey, if you own a CryptoPunk, we will allow you to buy a custom piece of jewelry. It was like $40,000. It was pretty expensive. That is unique to your CryptoPunk. And they sold out in like 2 hours. I think there was 250 of them or something. That was a really interesting use case where basically those people who own those CryptoPunks were very unlikely to be Tiffany's customers previously, but because they were able to buy something that they thought was unique and special, given an asset that they already owned, they were each willing to shell out, on average, about $40,000 to buy something that they thought was genuinely unique and special. It's unclear if that will scale or whatever, but like that's a really interesting example of identifying a new target market and marketing to them in a very specific way, and it has worked at least to some degree. The other one I want to highlight that's fairly obvious is Nike and what they're doing with Artifact. Nike, a large part of their brand is the kind of the sneaker collector crew, and people buying and selling sneakers, and GOAT and the other shoe marketplace, whatever. There's already a culture around collecting shoes, right, and shoe design and such. And we know that's a fairly large scale consumer behavior. It makes sense that like a brand like Nike would experiment with digital versions of the same thing, whether they're digital shoes or whether now it's like a way to do other kind of clothing that they're experimenting with. But it certainly makes a lot of sense that at least brands that already have some sort of collectible element to them are going to embrace this in a pretty substantial way.
It's funny, right? We haven't really talked about decentralized finance or the trading element of crypto at all during this conversation. And it speaks to just how broad the opportunity set has become over the past few years. And crypto is not just about, peer-to-peer transactions or payments, although it is, but it's now kind of seeping into what I describe as like the flex economy. To your point, Kyle, the reason why so many of these initiatives are relatable to people is because they already have a parallel in the analog world, whether it's running, collecting sneakers, collecting art, which might be tied to the Cambrian explosion we saw in NFTs. But so much of it is about just your identity. How do I sort of represent myself in the digital world where we spend most of our time and energy? And so this sort of speaks to this idea of digital identities. Do you think that that's a core component of where crypto is going, this idea that our identity may reside to some degree in a wallet, and there's all of my engagements in the Web3 world are tied to that wallet, and you can see it?
Is that for me?
Yeah.
A lot of thoughts here.
Thoughts.
I'll try to do the 30-second version. You have today many identities. You have, for me, as a simple example, my Twitter, which is super public, and my Instagram, which is very private. And this is true for everyone. You have your work identity, your home identity. It's not that they are entirely separate concepts, but they are, depending on the person, like how separate you want to kind of control them and keep them. So the idea like one identity to rule them all, I think does not map to basic human psychology and how people think about their lives and categorize and manage their lives today. So I don't subscribe to that theory. There will be lots of public keys that manage lots of things on public ledgers that will impact what you do online. Beyond that, it's hard to generalize.
Yeah, I think that the digital identity is quickly becoming a major part of the narrative, at least on the consumer side, both in crypto and even outside of crypto and consumer internet. You see people spending way more time, on average, I think Roblox user on average 2.5 hours per day. So like so much time in the digital world, and the ways to express that are still fairly limited. What I'm bearish on is that that's going to take form in the wallet. I think that the wallet is actually will eventually become more and more abstracted, and ultimately where the user, where a person is actually spending most of their time is in an experience, whether it's in a social network or in a game or in some sort of something in between. And I think that, the wallet may be embedded in these applications, whether it's native Web3 or it's actually like actually an incumbent today that is like quickly developing into the Web3 space. But I think that one of the biggest barriers to entry for most people in retail, I think, are actually the fact that, self-custody wallets and that form factor is just super difficult to use. And it's scary to transact, like, moving an NFT from one place to another actually is scary for me to, like, even now. And so I just like don't see that as like the major form factor for the next 100 million people that want to be using the product. And so I think that's how it shapes. But I do think that that is the most likely use case to bring the mainstream, I think, audience into getting an NFT for the first time, even if they don't even know that it's an NFT, right? Maybe it's like a cool avatar that they wanted for a specific, social network that they wanted to be part of. And you had mentioned sort of the trading DeFi side. I think it's going to be a space because it turns out that there's a lot of volumes flowing into like DeFi products, and people want leverage in order to, buy certain cryptocurrencies, and DeFi is a way to do that. But I think from a number of users' perspective, it's going to be still relatively niche over time. We're just going to see a lot of, I think, volumes trading on that. And increasingly, you're going to see consumer use cases to dominate the space.
What risks do you see out there? I mean, we just got out of a pretty dramatic collapse tied to, I would say, leverage. Specifically leverage to a very specific counterparty, or two counterparties, you might say. That was what brought us down, and to a degree, maybe it goes back further to Terra Luna's collapse. The leverage has been sucked out of the system, but are there any potential risk hanging over the space? You mentioned regulation, Amy. Maybe it's that.
I think in terms of risk, I think, as Sam's also mentioned, I think most of the distressed company cycle has probably, ended. I mean, I think there's also a distress cycle going on right now, for example, in mining companies. And I think, post-merge, you're going to see more of that probably. But I think in terms of risks, regulation is something that I think people in the space have been worried about for the last decade. And I think it's a slow process. Actually, we think we're on the net optimistic there. As there's more engagement, as there's more education there.
As Sam is in DC more.
Yeah, since Sam spends most of his time, they're just educating, lawmakers and having them kind of come to their own conclusion around what's the best way to regulate the space and also help provide more security for your average person who wants to buy $10 of Bitcoin. And so we're actually optimistic there. I think the risk is still around, all these rug pulls and just security breaches, in these, wallets, bridges, and other applications. Every time that happens, I think it removes a layer of trust in our space. And so we've got to do better. And that's still probably the biggest risk and the biggest blocker of mainstream adoption in my perspective.
The last 6 months were maybe about counterparty risk. Looking forward, the next 6 months, maybe there's a focus on technical risk. Bridging especially is very scary. It's a hard thing to do. Technical risk?
Yeah, I mean, I think, there hasn't been really a strong bridge between any layer ones that has been used, amongst the top 5 volumes of bridges and not had some kind of exploit. And that's pretty scary. Obviously, Solana is a little contrarian and biased. We're just planning, all of our users are on one chain. It's as many transactions, as much volume as, other blockchains combined on some days. And so I think, these are independent. There's a reason we use the word ecosystem. They have to kind of grow, and they are fragile. They are balanced in a very precarious way. And I think, to me, it does depend on growth of something. It doesn't have to be just volume or value, but users is the thing that I care most about. And I think, if crypto doesn't get to 10 million kind of self-custody users relatively soon, if it doesn't get to 100 million, I don't think we're going to see those very explosive, more obvious second order effects of why crypto exists. And so I think the biggest risk to me is just, builders losing faith, losing confidence, and not continuing to build through this bear market. But again, I haven't seen any signs pointing to that. Our last hackathon was the one that had the most participants, 18,000 registrations, 750 teams formed, and it was in the worst market conditions we've ever seen. So I think it's just, I'm waiting for entropy to play out and for some of these validation points to naturally come as they do with new technologies.
I wonder how many folks in the audience have a wallet. What would you think? Maybe half?
Show of hands.
Three-fourths?
Anybody have a wallet? Yeah.
As a wallet?
Look at that.
That's pretty good.
Yeah.
All right. Crypto native audience here.
We're not talking about leather wallets.
No, yeah,
Okay.
exactly. The crypto ones. Well, honestly, I think we can leave it there. This was a great conversation.